What's a firm of the future, or as I prefer to call it, frankly, a firm of the here and now? A firm that engages in today's technology and leverages the latest and greatest and cutting edge software that's out there in order to better serve our clients on Main Street and in the small business arena. A firm of the future to me is a firm that takes advantage of that stuff. It's a firm that is constantly looking to find better ways to improve processes, to create efficiencies so that we can get the work done faster and get on to what's really important, which is not so much the entering and compilation of the data, but rather the analysis of the data. So more and more, I'm trying to show people how to look at the analytics, how to create the analytics, and how to evaluate a company's balance sheet and understand what that says about the financial position of the company right now. And based on that, help our small business owner clients make better decisions about where to go with their company. Help them understand, how do we build and grow? Is it by making the greatest profit possible? I'd say that's a given. Every company wants to make, unless you're a nonprofit, and even in some cases there, but let's not go there. Let's just stick with the for-profit arena, and let's assume that every company wants to make as much profit as possible. That's a given that goes without saying. So is that how you manage the company? I think not, because a lot of problems stem from there if that's how you try and manage the company. Again, everything we do in business goes with the premise that we're trying to make as much profit as possible. The real question is, what do you do with that profit? And I can throw all kinds of fancy formulas at you and adjustments to the formulas and look at things from every different possible angle. And the reality is, I think it can get into an area where it's a lot of smoke and mirrors. What I'd like to show you, what I'd like to begin showing you if you come along on this journey with me, is a simple way to look at and evaluate a company. First and foremost, we have to understand all three financial statements. We need to understand the profit and loss. That's simple enough: revenue, expenses, net income. But more than that, we have to understand the balance sheet. And we definitely need to understand the statement of cash flows. The statement of cash flows is ultimately going to show us the real health of the business. Where are the cash flows coming from? If we're constantly reinvesting our own money into the business to keep it afloat, that's going to show up very clearly in the statement of cash flows, because we're going to see that the cash flows are coming from financing activities rather than operating activities. So statement of cash flow is a very important way to evaluate whether or not this business is going to be able to continue as a going concern. The balance sheet is perhaps the other really important financial statement for purposes of managing the company from an analytics point of view. And really, what should be the strategy, I think, with every business? At one time, I used to think there was a difference depending on what the client's goal was. And if the client said to me, I'm going to sell the business, then that would be one strategy. If the client said to me, no, this is my business, this is my baby, I'm going to grow it and run it right into retirement and then shut things down at the appropriate time. If that's what they told me their goal was, then I had a different strategy for them. The truth is now, either way, whatever they tell me, it ends up being essentially the same strategy. These are some of the things that get looked at when analysts analyze companies on Wall Street. And why not use the same sort of criteria or benchmarks for measuring the performance of a small business? It should be the same. We may not be looking at it based on per share, and all that means is we're just dividing the totals by the number of shares outstanding. Instead, we're skipping that part and we're just looking at the totals. So we look at the equity section of the balance sheet, and we start to understand this is the place to reverse engineer from. This is the area from which we grow the business. We look at the numbers. We look at how can we increase equity in the balance sheet. And that's what I want to start to talk to you about a lot going forward.